So this is going to be a quick lesson, and we're going to be talking about trends. We've been talking about trends in previous videos, and I think you should be familiar with what trends are. Trend is the general direction of market or of the price of a security. In technical analysis, trends are identified by trend lines or price action that highlight when the price is making higher swing highs and higher swing lows for an uptrend, and lower swing lows and lower swing high for a downtrend. So let me explain what this looks like in real life scenario. We already know that uptrend means the price is going up. Sideways means the price is not going up and is not going down. It's consolidating. And downtrend means the market is dropping. The price of a particular commodity is dropping. So let's see how this looks like in real life scenario. This is ETA chart. I know these candlesticks, they look weird or complicated to you. Don't worry. In the next module, we are going to be talking about candlesticks, and you will know what they mean. So let's get into trend. For example, from here to here is an uptrend. In between uptrends, you know market cannot continue going up in a straight line. It is not possible. So market moves in a zigzag manner, even though the general movement or the general direction of the market is up. This is an uptrend. From year to year is an uptrend. Can you see? So from there, we also have a downtrend, which is from here to this place. That's a downtrend. This is what an uptrend looks like. Let's pick another example. From year to year is an uptrend. From here down here is a downtrend. So all these levels are swing levels. These little levels that you are looking at, they are called swings. Swings. This is a swing. 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 Do you understand? Let's pick out more swing levels. This is a swing level. 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 Several swing levels. This is a swing level. This is a swing level. So let's explain when we said an uptrend is when a price is making higher swing highs and higher swing low. For example, this is how price looks like. This is how price moves in the market. So if something is going up, remember, it doesn't just go up in a straight line. It doesn't go like this. It's still giving different kind of swings. And these swings, before you can consider something to be an uptrend, it must be giving swings that are higher than the previous swings. Do you understand? So each swing must be higher than the previous swing. So this is a swing. This is a swing. So this is swing low. This is another swing low. This is another swing low. This is another swing low. Do you understand this now? And this is swing high, swing high. But remember, if you notice, this swing high is higher than this swing high. This swing high is higher than this swing high. Do you understand now? For the lows, this swing low is higher than this swing low. This swing low is higher than this swing low. This swing low is higher than this swing low. This is how you confirm that a trend is an uptrend. When you start seeing higher swing lows, because this swing low is higher than this swing low. This swing low is higher than this swing low. So you can easily say these are higher swing lows and these are higher swing highs. So this is how you know uptrend. It started from here, it ended here. Do you understand? And for a downtrend, let's clear this up. For a downtrend, so price has been moving this way. We have high here and we have a low here. But remember, this is a downtrend. We don't need to be seeing higher lows and higher highs. Now we want to be seeing lower highs and lower lows, lower highs and lower lows, lower swing highs and lower swing lows. So this is high, this is low. The next low is lower than the previous low. This next low is lower than this previous low. And for the highs, this high is lower than this high. This high is lower than this high. This high is lower than this high, and this is how you identify a downtrend. So this is a downtrend. That's how it works. So let's go to sideways trend. Let's clear this up again. Sideways, we are not forming higher highs and higher lows, and we are not forming lower highs and lower lows because the price is basically moving inside a channel. For a sideways trend, you will have something like this. So what do you notice about the chart? There's no higher low, there's no higher high, there's no lower low, there's no lower highs. All you have is just support levels and resistance levels. So price is just moving inside this channel. It's not going up, it's not forming higher lows, it's not forming higher highs. Do you understand? So this is what a sideways trend looks like. You can see for an uptrend, we have low, higher low, higher low, higher low, then higher high, higher high. For a sideways trend, we just keep having high and low, just moving in between this channel. For a downtrend, you have lower low, lower high, lower high, lower low, lower low, lower high. Do you understand? The highs that are forming must be lower than the previous highs for a downtrend. For an uptrend, the lows and the highs that are forming must be higher than the previous lows and highs. Do you understand this? So this is what it looks like. An uptrend is a general upward movement of a price at a given time. The forces of demand is greater than supply in this case. Remember, when price is going up, it means there is so much demand in the market. People want to buy that particular product, so the price is going to definitely go up. For a downtrend, it is a general downward movement of a price at a given time. Here, the forces of supply is more than the forces of demand. It's that simple. We discussed it in previous lesson too. So here, the supply is more than demand, and when supply is more than demand, price tend to drop. Do you understand? So downtrends are marked by falling data points, which are what we discussed in real life scenario, which are lower swing lows and lower swing highs. You can see them: lower high, lower low, lower high, lower low. This high must be lower than this high. This high must be lower than this high. This low must be lower than this low. This low must be lower than this low. It is that simple. So let's see another example in a real life scenario. So let's clear this up. And don't worry about this platform. I'm going to show you how to register and set it up later in the course. Once you complete the course, you have all it takes to be a successful trader. I promise you that. So for example, we can say this area, this region can be regarded as sideways. You can't really trade this particular setup because it is moving in between this channel. It is moving in between this channel, so there's no higher high or higher low that is forming. This is basically a sideways trend. But from this point to this point, from this place to this place, we can say that is an uptrend. That is an uptrend from year to year. So we have an uptrend here. We have a downtrend. We have a downtrend here. Then we have an uptrend from here to this place. And then from there, we started having sideways again. Sideways trend. Do you understand? So sideways, uptrend, downtrend, sideways, then another uptrend. That's how it works. I hope you understand. If you do not understand, once again, please rewatch the video. So this is all about trends. And in the next lesson, we are going to be talking about trend lines. Take a break, take a coffee, and we'll see you in the next video.